originally started making this video on how to fund yourself for free up to $150,000 of 0% interest business credit for Instagram. But then I quickly realized that I need to give you guys all the information, and that might take more than just a minute or a minute and a half. So let's get started. This is probably going to be broken down into many different parts. This is part one, and what we're going to be going over are the personal credit data points that you're going to need to get approved and look like a VIP borrower. And if you don't have those data points, don't worry about it, because we're also going to be going over the tools that you'll need to get there. Now let's get started with your personal credit score. It should go without saying, but you're going to need at least a 700 plus FICO credit score. But beyond the credit score, what we're actually looking at is what your credit report says. That's going to be the most important thing, really. So if that's you and you're not at a 700 credit score, what you need to be doing for the next 30, 60, 90 days, maybe even 6 months is focusing on credit repair and building. So what can you do? I typically recommend you start with low-hanging fruit credit repair. So for collections, you can download my free 24-hour collection removal guide. And no joke, I have seen collections come off from Experian that same day in less than 24 hours. For other things like charge-offs, late payments, and any other kind of derogatory information, you have a couple of options. There's a free DIY credit repair platform that a lot of professionals actually use, and this could be an option for you. It's free to sign up, and each round of letters will cost you about $20. The good thing about Dispute Panda is that if you learn how to do it for yourself, this could potentially turn into a side hustle or even potentially a six-figure business. The next option is a free DIY AI credit repair option, and that is my platform called creditblueprint.org. Listen, it's free. You can send your letters out in minutes, and all you really need to do is pay for a monthly credit monitoring service so that we can get your monthly credit reports and updates. Now, what can we do to maximize our time and to make sure that we get to the funding in the quickest time possible? Well, while we're repairing, we could also be building, and not just building, but strategically building out that credit profile out. What do I mean by this? Credit repair is the process of removing negative and harmful information from your credit report. Credit building is adding positive information to your credit report. And you can do this with services like Rent Reporters and Tomo Credit, where not only will they give you a trade line that will report on your credit bureau and therefore help your scores out, but it will also backdate payment history to help you build history, therefore helping your score out. Now, again, if you are in the credit repair phase, you need to be focusing on repairing and building. The funding will come, but there are some things that you might need to do right now that need to happen before you get business funded. Now, in the industry, they have something that they refer to as a thin or thick credit profile. And what that can mean are two things. They can refer to your profile as thin as the amount of average history your profile has, or the amount of trade lines it has reporting, or usually a combination of the two. So if you're in the credit repair phase, and let's say you just have 20 years of built up credit history, there might not be a need for you to add new trade lines. You just need to continue servicing the lines you already have, make sure you have on-time payment history, and wait for that negative information to fall off. However, if your profile is thin and you have about 5 trade lines or less reporting, and that's all of your accounts, including credit cards, mortgage, auto loans, then you might want to consider adding trade lines. And I don't mean authorized users, I mean primary trade lines. Now, if that's you and you have a thin credit profile and you're looking for a strategy to build it up, again, be aware with all of the information that's out there on YouTube, because most of them will have you signing up for subprime credit cards or credit boosting products that are not going to grow with you. And one thing to keep in mind is that a lot of these credit boosting products are not necessarily gonna make you look sexy in front of an underwriter or help you get approved for higher limits. They will help you boost your score, and that's about the limitation of that. Now, here's the thing, that information isn't necessarily wrong. Those subprime credit products will help your credit score out, and it will help you eventually get approved for credit cards. But again, we're trying to take the fast lane here. So if you look over my guide, you're going to see that every single trade line I recommend on there are with financial institutions, whether that be a bank or a credit union. Because what we're looking to do, and what I mean by strategically building your credit out, is that we're going to get lines that are not only going to help us boost our credit score now, but also help build the relationships with the banks that we're ultimately going to get funding for. Which brings me to my next slide, and the next data point that you're going to need to unlock high limit business funding. You're going to want 2 to 5 primary credit cards reporting on on your credit report. Now, if you're not there yet, but you're not in the credit repair phase and your credit is at least a 680 plus, then what you can do is begin to strategically strengthen your personal credit profile by using soft pull pre-qual offers. That way you don't get any unnecessary hard inquiries. And you might want to also consider adding 2 instead of 1. That way you beef your credit profile up a little bit more. They start to age together. And again, these are credit cards that you are choosing strategically because they offer soft pull pre-qual offers and because we know that they're going to do soft pull inquiry credit limit increases. These are banks like Chase, Bank of America, Amex, Wells Fargo, the Apple Card. There are many of them out there. One good resource for any kind of credit data points, but more specifically, if you're looking to see which banks offer soft credit limit increases, the MyFICO forums are extremely useful. Now, you do not want to add more than 2 new revolving accounts every 6 months and no more than 4 every 12 months. And again, that's to keep you from getting denied if you ever had to apply for an apartment, a car, or anything else at any given time. That's actually one of the benefits that you have to look forward to when we finally graduate and are ready to go for business funding. Business credit cards, 99% of them will not report to your personal credit report, therefore not affecting your credit score, your utilization, or anything like that. Now, again, if you are in the building phase, make sure to download my guide on how to go from bad credit or no credit to your first 50K in business funding, because it really goes over the entire strategy. If you have a thin credit profile, it's not just about adding credit cards. Essentially, this guide breaks it down and shows you how you can have 5 new trade lines from financial institutions reporting on your credit as early as next month, your next billing cycle, or whenever the credit reports update. And this typically involves 3 secured loans and 2 secured cards. Now, again, this is more for people with thin credit profiles. You don't need to be adding a whole bunch of new accounts if you have the history built out, because we really want to add those new accounts to the business side so that we can continue to fund ourselves, remove those business inquiries, and keep the golden goose untouched. Again, that's one of the benefits of business credit. We can go apply for a bunch of business credit products, wipe the inquiries from the personal credit profile, leaving your personal credit profile untouched and protected for more funding down the road. Here's a little gem. If you have capital, if you have money in savings or under a couch that you're not using or that you know that you're not going to need for 6 to 12 months, then you should consider building a relationship with credit unions like SDFCU, for example, where they virtually have no limit on the amount that you can get on your secured credit card. So if you have $30,000 sitting in savings, you could easily deploy that money into getting a secured credit card with a $30,000 limit. So what is that going to do? Well, when you go apply for more credit cards, they're going to look at your comparable credit, mostly the credit cards that you already have, to make a decision on your approval and the credit card limit. So I hope that's starting to make sense how with the right credit products, you can really start to build a sexy profile out really quickly. And with capital, you'll have a high limit credit card or 2 reporting on your credit report so that when you start to do those soft pull pre-qualification offers, not only are you getting approved, but you're getting approved for super high limits. All right, so hope you guys are still with me. The next couple of data points are you're going to want a combined revolving credit limit of at least $15,000 and 1 card with a credit limit of at least $5,000. Now, again, if you're not there yet, one of the ways that you can increase credit limits relatively quickly is through heavy utilization, heavy spend, and paying that balance to nearly 0 by the closing date. And again, let's make sure that we're on schedule every 6 months for requesting those credit limit increases on those credit cards that we know are only going to be a soft pull inquiry. Another very important data point is that you're going to want to have at least 1.5 to 2 years of average credit history. Now, this is more on the minimum side of things. You do want at least 5+ years. Obviously, the more, the better. Now, if you're not there yet, we can add history to a credit report by adding authorized users. Many people think that's the holy grail to getting funded, but it's really just like the icing on the cake. It's a tool and it will help in mostly adding history, and it could also help in lowering your overall utilization. But we also want to look at each account in terms of utilization. We'll go over that in just a second. Now, again, you want to add 1 to 2 authorized users. You don't want to go crazy with that. Now, the best thing is to ask a family or friend, and I give my clients a little script to tell them because a lot of people are scared when they don't know. So you just let them know right away that you're looking to get added as an authorized user where you won't have access to the credit card, and you're doing this to build your credit so that you can get business funding. Now, nothing that you do on your credit profile will affect their credit profile, and emphasize that you're not going to have access to the card as well. And maybe offer them a $50, $100 Amazon gift card, because there are secondary markets out there where you can buy these authorized users, but that comes with risk, giving your personal information out, and they're expensive and they don't stay on forever. Now, when adding these authorized users, you don't want to add too many of them. 1 to 2 is enough. The credit profile has to make sense. So if you have 10 authorized users and only 2 or 3 primary accounts, it's just not going to make sense. The underwriter is going to see right through that. Another important point on authorized users is that you want to prioritize the age of the account over the credit limit. And you want to make sure that it has perfect payment history and low utilization below 8% so that it can actually help your score. Because remember, you're actually going to inherit all of their payment history. Now, there are services like Rent Reporters and Tomo Boost, which can help add backdated payment history to your credit profile. And a very important mistake that I see a lot of people make is do not close any credit cards. Instead, consider requesting a product change. Especially if it's been open for a while, this can hurt your average age of credit history. So the next data point we're going to talk about, a super important one, is credit utilization. Now, before I get into the tactics on how to fix that if you're currently in utilization hell, a couple of things about utilization. When I'm talking about utilization, I don't mean overall utilization, although that's important. What's more important and what underwriters are going to look at is each individual revolving account. And for that, you want to be under 20%. Now, what happens if you're not? Well, you can consider a personal loan, and you might want to look into financial institutions that offer soft pull pre-approvals for loans like PenFed, First Tech, and Discover. As of the recording, Q1 of 2024, PenFed and Navy Fed, just a little tip there, will give personal loans up to $50K on stated income only. But again, remember, you do want to build a relationship with them first. Now, a personal loan could also help with the credit mix if you do not currently have several installment loans reporting on your credit profile. For example, an auto loan, a mortgage, or student loans. Now, here's a fintech product a lot of people don't know about, but it's called Goss, I believe. And what it is, it's a personal line of credit that you can use to pay down your credit card balances. Now, the amazing part about this is that good standing accounts with Goss won't report on your credit profile, therefore hiding that utilization. So again, it's just another tool in the armory to help you. An actual use case, we had a client that was at about a 50% utilization across all 3 of his credit cards. And between Goss and a personal loan, we were able to wipe that revolving debt off, therefore shooting his score up, lowering his utilization. And before that personal loan even reported on his credit report, we were now in position to go for a round of funding. So that by the time that loan shows up on his credit report, we've already obtained a stack of business credit cards. So what can we do now? We take those 0% interest business credit cards that won't report balances to our personal credit profile to pay off that personal loan. Now the bank loves you and you can go back for a bigger loan or different financial products. The next data point that underwriters are going to scrutinize heavily are inquiries and opened accounts. Now, so many people sweat inquiries, but what people don't realize is that new accounts are actually a lot more harmful when it comes to the funding process or really getting approved for anything, because having too many inquiries and too many new opened accounts can be seen as credit seeking behavior. I don't know if you've noticed, but banks only like to lend to you when you don't need the money. So here's the data points. You want no more than 2 inquiries per bureau in the past 6 months, no more than 4 inquiries in the past 12 months. And this goes for open accounts too. You don't want to open more than 2 revolving accounts in the past 6 months or 4 in 12 months. Now, same thing here. I do have a guide that you can download for free on removing inquiries. The best way would probably be just to look me up on Instagram. It's Patrick Pye, and shoot me a DM with the word inquiry, and my bot should automatically send you that link. So there it is, part 1. All the personal credit data points that you're going to need to get approved for $50,000 to $150,000 of 0% interest business funding. So thank you for tuning in. And guys, if you haven't already, please be sure to like, subscribe, and leave any comments or questions that you may have. Part 2 is coming soon, and we're going to be going over optimizing your business for funding. Even if you don't have one, we'll be going over how to form your company correctly. Thanks, y'all. Take care.